Hi, and welcome back to Trading Suite. Today, I want to show you my main strategy and these 6 points that I'm going to cover because I want to teach you my strategy and how it works. But remember, this strategy can be a little bit complex because it's not like this classic trading strategy. So, um, you have just to keep with me, trying to understand. And also remember that this is just the most simple way of applying this strategy. So there is a real way, and I'm going to show you the simple way. But you have to understand this part first if you want to use it, because in point one, the main strategy is not a classic strategy. The strategy really is money management. So I want to start with showing you just to keep this over here. I'm going to show you that point one is that strategy is money management. Money management. So the focus is really different. We are not focusing on entering the specific places or specific setups. We're not looking for setups. At least for the main strategy, we're not looking for setups. We're looking to mm, manage our risk, manage our lots, manage our positions. So this is going to be a little bit different, but I think you're going to like it. And the second part, or at least the second different things from classic trading strategies, is that this strategy has no stop losses. So why this has no stop losses? Because we manage risk. If I open a trade, let's suppose, and I open a buy trade, I make this buy trade, and the price just goes down, and this is my stop loss. Let's suppose this is my stop loss, and I close this trade. Guess what happened? You cannot manage anything because you just close this trade. So that's why in trading suite or team use a different strategy and a different technique. So just keep with me with this. Um, Let me know in the comment if you like the strategy or not. So let's start with part number one. So let's suppose you are just seeing a chart. So this is price. You know how price move, right? So it's like up, down, up, down. And let's suppose price is over here and you look for any setup, whatever you want. Remember, we don't have a specific setup, so I can also check this part. No setup. No setup. So what this means? This means, for me at least, this is a good thing because you can use any setup. So instead of no setup, you can substitute with any setup. So you can apply this strategy with your already strategy that you are using. So no setup means any setup also. So this is a good thing for me, and this is really dynamic. So you can uh, use an EA or just manual trading, and you are going to be able to enter whatever you want. So let's continue with the main strategy. Let me delete this. Sorry. So we don't see this anymore. Okay, perfect. So you have, this is your price, right? You're over here. So this is a chart. Okay, awesome. Now, let's suppose you just want to enter over here. Remember, we don't have a specific setup. And this is a buy trade, right? Buy trade. Okay, let's suppose you're using 0.1 lots. 0.1. Okay, so you enter a trade here over here, and the first scenario, of course, is just price going up and you close everything and you make money. So this is really simple. So this is not a strategy. Remember, we are with money management. So we are, the name of this strategy is recovery drawdown. So let's suppose you have a buy trade over here, right? Okay. So let's suppose this is your buy trade. Okay. Now price goes down. Let's suppose you range here, and now price starts going down, 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 down. And in the classic strategy, this is going to be your stop loss, right? And you just close the trade, you lose money, whatever. But instead of that, we're going to make a sell trade over there. So remember, if you buy over here and you have a stop loss over here, this is the stop loss is really a sell trade. You're selling this buy, right? So instead of a stop loss, we're going to make a hedge trade or a counterpart trade of the same amount. So we make a sell over here of 0.1. So this is a good thing because now you freeze your balance. Because if you have a buy over here and a sell over here, where now price can go whatever place to whatever place, and you're going to remain with the same balance. So you're not losing money anymore. Sorry, this is 0.1, not 2. This looks like a 2, so it's a 1. Okay. So you have the same buy and the same sells. So this is the first part, to substitute stop losses. So this is like a new rule. You substitute stop losses, classic stop losses, for new trades, or what you can call it hedge. You can call it hedge now. New trades or hedge. So this is a new scenario. Why we're starting this strategy over here? Because this is money management. Because now I still can work with this buy trade. Like it's open, so I can still work with this. And I have a sell trade, and I can still work with this. If I just close this trade in a stop loss, you can no longer work with this trade. So we can start moving probabilities to our favor now. So let's suppose now price start moving, and you're going to place two trades. You're going to place a new buy over here of the same lot size, 0.1, and a new sell over here, sell of the same lot size. So this is buy, and this is a sell. So if price touches this size or touches this size, you're going to re-enter the market. So where you're not increasing risk, like in the classic trading strategy, because now you hedge this trade. So these trades are balanced. This is a balanced trade, and you want to unbalance again time to time the trade. So if price goes down, let's suppose price goes down, you make a new buy. So this sell trade, if not open, and we remain with now two buys and two sells. Okay, perfect. After this, two things can happen, right? So price can go up, right? Price can go up. And what happens when price goes up? Well, happens something really good. Happens that you lose this amount of money with this buy. This sell is on break even, and this buy is on profit. So the result of this trade is $0. Let's suppose this is just an example. The result of this trade is minus $10, and the result of this trade is plus $10. So the result of all of this is just $0. But I can only do this when I keep these trades open, right? if I have this buy open, this sell open, and this buy open. And I know you can say, like, let's go back and think for a moment, like, if I buy this one and it closes with a stop loss, I can lose -10. And then I just open this buy and I can open +10 and it's going to be the same, right? Like this same result, right? And yes, you are correct, but the thing here is that if this is the best scenario, but price can keep going down. So if price keep going down, you are going to keep reopening new trades in different places. We're going to see that now. But this price, this trade, you can also freeze. So the strategy is to keep trades going on, because if you simply close it, you just lose money and the thing. That's it. Um, Remember, this is the most simple part of the strategy, so you have to keep with me with all the ideas, because we are just in the first part. Remember, we have to cover all of this to understand what is going on here. So let's make a new chart. Let's suppose let's say in the same scenario. So this price, and you're going down, and you make the buy trade over here. So I'm going to put a green line, and then price is going down, and let's suppose you lose money and you sell over here. So you have point 0.1 over here, and you have 0.1 over here. Now, what you are going to do that I'm going to show you is the worst scenario. So price goes down again, and you make a new buy over here of 0.1, and the worst scenario is to keep moving down. This is the worst scenario because you're losing now 2 buys. Okay, so what you're going to do is to make a new buy over here. New buy over here. This is 0.1. Prices reaches, and you make a new buy over there of the same lot, 0.1. Okay, for the example, I'm using this distance, like the same distance. This is the same distance now. This is not for the real strategy. In the real strategy, there's no fixes distances, because the distances goes with market. So we're going to that at on 0.5, the real entries, real entry zones. We're now just using fixed distances. So remember that in the first part I said this is going to be a little bit complex, but you have to just keep going with me to understand everything. So if you keep buying, you can say also, oh, well, this is the classic grid strategy. So if this price goes down, you make a new buy, and this is the classic grid strategy. I'm going to say we're using part of the grid strategy, but not using everything, you know? Now, why we're not using everything of the grid strategy? So this is the good part. So we are now entering in the second part of strategy. The second part means, let's check or over here or panel. So the main strategy you know already, at least the first simple part. We're now entering into the reduce drawdown. So we're mixing the a little bit. It's not this exact grid strategy. Yes, we are re-entering and a certain distance with the losing main trade, that is this first trade. We're entering one more time every time, but the new part is that you have this loss, you have this is a loss, this is a win, this is a win trade, because we're selling now, we're making money in this one, so that's pretty good. This is a loss, this trade is a loss, this trade is a loss, and this trade is a loss. Sorry, this trade is a break even now because we're just entering there, right? So what happens? One of these trades are going to going up. The trade don't have to go all the way to recover everything. No, this is not the strategy. This is a money management strategy. So we're going up just a little bit. When some of this trade goes a little bit, for example, I just drew this one and this goes up a little bit over here and this one goes a little bit over here. Okay, let's suppose it's not enough. So this trade, it goes a little bit up. So what happens? If this is a loss trade and now this is a winning trade, we close these two. So this close over here and this close over here. What happens now? What happens now is that this trade is no longer open and this trade is no longer open. And the remaining, you have this losing trade, this losing trade, this winning trade. So now you want to reopen again. But here's the difference. This is a kind of grid strategy, but we're mixing with money management. That's a really good thing because we're not expecting like the classic grid strategy. The strategy is open trades, and they need a like a really good amount of pips to recover everything. We don't want to recover everything. We want just a little movement to close our previous losses. So now you can close this one over here and you could close this one over here. Now you have just three trades. You have just three trades. So that's pretty good. And you can re-enter the market. So let's suppose the price goes continue. Let's suppose now it's going up and you make a new buy trade of the same lot sizes, zero point 0.1, and prices goes one more time. And now you're in the same scenario. You can see this trade is a break-even trade. This trade is a winning trade. This trade is a winning trade, and this trade is a losing trade. Sorry for a lot of lines, but this one is losing money. But you can recover this loss with this win plus this win, and this is just break even. And you close everything. Now this is the good part. Look how keeping these trades open, can give me a winning buffer. I keep this trade open. So everything open. With every trade open, I can manage my position. I can manage my money. I can manage my re-entries, my exits. And remember, this is just a simple part. This is not the main strategy. This is just the most simple way I can explain it to you. So let's keep going backwards. Sorry for that lot of lines, but this is a lot of information, but you have to keep with me, right? This is the most simple strategy. So, okay. Let's go to the next part, that is the hedge part. So the hedge part, it comes down when the strategy is more complex. So what happens when strategy gets more complex? This means that instead of, let's suppose, just one trade, you enter this first buy trade with, let's suppose, zero point 0.5. So you have 0.5 lots. Now price is going down, and you're still not starting the recovery drawdown strategy, and you make this sell trade of 0.5. And let's suppose now price goes up. I don't know, let's see, price goes up and you make a new sell trade. Let's suppose you make a new sell trade over here of 0.5, and now price goes maybe down a little bit. So here what you want to do is to reduce your drawdown. What this means? This means that this is, let's suppose this is your main strategy. You say, well, I buy here, I sell here, over there, blah blah blah. And now you are in a drawdown because you're losing money here and you're losing money here and you're winning money over here. So what you want to do is to calculate your win money and your lose money. So let's suppose win money is with this trade, right? So This winning trade is making, let's suppose, I don't know, mm, $50, right? Whatever. This is just an example. And this is a losing trade, and this is a losing trade. And this trade is losing, let's suppose, $50. And this is, of course, losing the same $50, right? So what you want to do is to close your profits. So this trade over here, you're going to close it on profit. Okay. So this trade no longer exists, but you bank $50. And then you want to close half of this trade and half of this trade. So instead of have 0.5 lots, you now have 0.25 lots, right? And the same goes for this cell. Now you have 0.25. So if the total was $50, now you don't lose $50, but you lose 25 in this one, and you lose 25 on this one. This is just number examples. I don't know the correlation with lots and money, whatever. You just want to see real dollar numbers. So minus 25, and remember you have plus 50, plus 50. So what's the result of this? The result of this is zero, right? Zero. But what happens? Happens that you eliminate this trade and you reduce your risk, you reduce your drawdown a lot. But why? Because you used to have 0.5 lots over here and 0.5 lots over here, but now you have only 0.25. You see? Now with this 0.25, let's go back in time. Just keep it up with me. I know this can be a little bit complex, but when you just start trading, it's going to be really simple, actually. Okay. Now, instead of these three trades with a bigger drawdown, you just have 25 and 25. And what can you do now from here? You can start the strategy. You can start all of this. But you want to start all of this with the fewer positions, with less positions than before, because you were loaded. So you were with 0.5. Now you are with 0.25. So you are it's less exposure, right? Less percent exposure. You have less margin on the market, and you also have less drawdown. So with all of this in mind, you can now put the orders, right? So you can, sorry, this is not a buy, this is a sell, because if you want to put opposite positions, so you want to sell over here, let's suppose in this point, so you sell over there. Remember, price were down, and let's suppose price goes up, and you want to sell in this, so in this resistance, so you sell, but now you're selling, so you're selling over here, not with 0.5 like the previous trade, you're selling with 0.25, so this is a less risk. And guess what can happen? Price can go down and close this, close this, close this, and now with a previous loss that you have minus 50 with these two, so minus 50 with this and minus 50 with this, you reduce it to minus 25, and now you re-enter the trade goes in your favor just a little bit, and now you are in $0 loss. So this is really awesome, because remember, we are not managing setups. Of course, we are not just entering random, and let me give you like a secret. I have backtested this strategy with random trades. I just created a random trade. I am a programmer, so I create this EA with random trades with the strategy, and the strategy works. Of course, works better with specific trades that we're going to see in the future. This video is maybe going too long, But in the future, we're going to see those random trades and the strategy without random trades. And you're going to see that these are real scenarios. These are complete real scenarios. So what happened? You say, well, we don't make money with this strategy. You're always closing on zero, right? And I can tell you, yes, but at the same time, it's no, because if you have your balance over here, your money, say you have your balance and you have a of, I don't know, you're winning, let's suppose, $100 this day. Today you have $100, but you make these trades, run trade, this is a run trade, and you're losing, the say $100. So you are on break even right now. If you close everything, you lose, that's it. I go home and I cry. So if I keep going with this money management strategy, what happens is that I don't go with zero. I go with zero with these trades. But remember, these trades were previous losses. So I transform a loss to a break-even trade. What happens when I transform losses to break-even? I keep my money. So this is a different approach. I want to keep the video to this time because maybe it's taking too long. I just wanted to show you the main strategy. I also missing all of these points, so you now know the main strategy. You know the how to reduce the drawdown. You know how to hedge, and you know how to recover. We missed the real entry zones and the backtest, and I want to show you our panel, but we're going to leave that to the next video because this is going too long and maybe it's too complex. So you can watch the video several times and you can maybe start trying on demo accounts and let me know how it goes.